But this morning, there's some new concern for some homeowners. A recent New York Times investigation found that private equity firms, which bought up distressed mortgages after the 2008 crisis, are making some of the same mistakes that banks made before the bubble burst. The Times reports the government sold off more than 100,000 of the troubled mortgages. The story says some of the private equity firms that bought those loans are quickly foreclosing on homeowners and even losing important paperwork. Other firms are choosing not to invest in urban and low-income neighborhoods. CBS News business analyst Jill Schlesinger joins us at the table. Jill, good to see you.
Good morning.
So this is different than the housing crisis of 2008. We should say that off the top. But it's the same in that the reason why some of it's happening is that the same rules don't apply to private equity firms.
Right, because when you are a bank, you enjoy very special privileges. You can borrow money from the discount window, essentially at zero. You have some FDIC insurance for your accounts up to $250,000. But in return, the government says, hey, you've got to keep a certain amount of money on hand in case of bad things happening in the world. You can't borrow too much. There are leverage requirements, and there are rules around how you conduct yourself in housing. Private equity, not subject to those rules.
Basically, what they're doing here is they're foreclosing very quickly, right? So instead of giving someone 3-5 months, whatever, they're saying right away, if you miss a payment, we're going to foreclose right now.
Right. And the problem with that is that a bank is more likely, especially after the financial crisis, to look at principal reduction, right? So lowering the amount of money you own on your house. In many cases, in this article, what they're saying is the companies are saying, okay, we'll cut your interest rate for a while, but then it'll pop right back up. And that's pushing people into foreclosure more quickly. Not good news for the homeowner. Private equity says, hey, we don't have a responsibility to the homeowner. We have a responsibility to our shareholders or investors.
Well, not good for the neighborhood either. Local communities, they're not vested, right?
Exactly.
Because they're not a part of it, in other words.
Yeah, and you know, look, they have a point, which is we are not subject to the rules. They are not doing anything illegal. But what has happened now, last week, we have new rules coming out from the government that are specifically dealing with these issues. And I think this is important because the government sold these mortgages off at a discount. They said, hey, it's great. Private industry coming in, helping to clean up the housing market, which it did. It stabilized the market. Unintended consequences were really clear. Oops, we didn't have enough rules in place to help protect these homeowners. So now these private equity firms that buy mortgages starting in September will be subjected to new rules. They'll have to do principal reduction, some limits on how they do the mortgages. But remember, does not apply to the 105,000 mortgages that were sold previously.
If I'm a homeowner, how do I know if I'm affected by these privately owned mortgages?
Well, you know, you barely know who owns your mortgage
I
because you
don't.
close your you close your loan, it's sold 14 times in 3 minutes.
Yeah.
That said, this is only going to affect you if you are late or delinquent on your mortgage. You may find out very quickly. If you do have a problem and you feel like you're mistreated, one of the things you can do is make a complaint to the CFPB, because I think they're very much looking into this. They want to be looking at the consumer angle.
Financial Protection Bureau, you're talking
Yes,
about.
that's right.
Okay.
Sorry.
And just to stress, we're not at the bubble. We're not looking at a big...
This is not a bubble, and
it's
I want
so scary.
It's not so much that it's scary, but it's unintended consequences. So the private sector can do great things, but we don't always have the rules and the framework that are in place.
Good point. Thank you.